Happy Monday, everybody. I hope you had a great weekend. Here in Chicago, we once again found out how wrong weather forecasters are. I'll come back to that in a bit. Today is March 6, 2023, and this is your Monday Market Update. As is our usual plan, let's review what happened last week and preview what looks to be another important week in the market. Stocks had some early week losses, but recovered to pretty much ignore most of the fears out there and had a pretty solid week in the green. Monday had eco data in focus and durable goods, and a very strong and unexpected pending home sales numbers came out. Even with 7% plus mortgage rates, pending home sales came in at up 8.1% month over month. Expectations were for up 1.1%. Here's my first reference to the similar nature of those estimates and the weather forecast. Fed head Jefferson was hawkish. At Harvard, he said, quote, "I am under no illusion that it's going to be easy to get the inflation rate back down to 2%. There's a lot of resolve on the part of the FOMC, and I'm committed to doing what it takes," close quote. Again, nothing new. Treasury Secretary Yellen spoke with some encouragement, helped to get a slight bounce in the afternoon, but there wasn't enough to keep the buying going. The markets ended just off the lows. The Dow was up 0.25%, S&P up 1/3%, and the NASDAQ up about 2/3%. Last day of February, and markets were back and forth between green and red on Tuesday. France and Spain posted CPI above 6%, and U.S. yields followed those higher. S&P did not go down too much. Optimistic tone to the end of the month. Soft consumer confidence. Recall, bad news is good news. Market was holding in until a $1.5 billion month-end market on close order imbalance came along. S&P closed down 1/3%. The Dow was down about 0.75%, and the NASDAQ was down just 0.1%. The month went out with a whimper. For the month of February, Dow was down almost 4%, S&P down 2.5%, and the NASDAQ was down 1%. On to March. In like a lion, we'll see the first trading day of the month, Wednesday, on the tail of another strong inflation number from Europe, this time Germany, offset by good eco data from China. Then the price component, the inflation item we're worried about, of the ISM manufacturing index here in the U.S., and chances of a 6% on the terminal rate were back in the news. Fed heads stayed true to their line. Kashkari is still hawkish. News wires were quiet, and as the 10-year yield hit 4%, stocks closed in the red. The Dow was flat, S&P down 0.5%, and the NASDAQ down 2/3%. Stocks started out lower on Thursday with more hot eco data from the U.S. and Europe. Unit labor costs were more than double what the estimates were, again showing how right they are in forecasting. Fed head Bostic hit the tape and is still looking at higher for longer, but still in the 5 to 5.25 terminal rate camp. And though the 50 basis point hike has been chatted about, he said he's still looking at the 25 basis points. That excites markets at this point. Markets managed to get some optimism and move a bit higher. The Dow was up over 1%, S&P and NASDAQ up 0.75%. Friday brought a gap higher on the backs of lower than expected Eurozone PPI report. U.S. eco data was not to be left out. ISM services had the price index component decline. As you saw throughout the week, this is the data that moves things now. The Dow was up 1.25% for the day, S&P up over 1.5%, and the NASDAQ up over 2%. As the week came to a close, the Dow and the S&P were up almost 2% each for the week, and the NASDAQ up 2.5%. The dash for trash continues as the losers from 2022 were the winners this year so far. Consumer discretionary, information technology, and consumer services, all up about 12% this year alone. The markets have shown great resilience in the face of the news that we have. Recall that the markets are forward-looking, but we have not seen the all clear yet. The next 3 weeks bring a lot to digest. This week we have 2 big events and some small ones as well. The big ones tomorrow morning and Wednesday will get Jay Powell in front of Congress. Don't expect much to come after what we see as written testimony. The Q&A is often just the politicians asking questions about the things they don't understand anyway and trying to get the sound bites. Watch for the shock and awe if Powell wants to pull things back a little bit. As I mentioned last week, and as we saw recently, any barely dovish comments from the Fed heads and the market takes off. And also recall that Powell has said that makes their job harder. This is why I continue to say, in my opinion, the Fed head talk is just jawboning the market to keep it from getting too hot. A 7% January was not what they wanted while they're trying to cool the economy. Speaking of, we'll get the monthly jobs numbers on Friday, and last month that knocked people off their seats, and we'll see what we get this week. On the labor front, we'll also get JOLTS and ADP on Wednesday and jobless claims on Thursday. Fed Vice Chair Barr will also get in on the action on Thursday, and if you think we'll have fireworks this week, next week we get CPI and PPI, and that's where we'll get more read-through on the economy. Recall that I've told you, like the forecasters of the 6 to 10 inches of snow that we heard about on Friday morning, and not one flake fell. This is how I'm thinking about the Fed. They will jawbone a lot, but the market has brought expectations up to near 5.5%, 6% on the terminal rate. I still don't see that happening, but their forecasts are like the ones that had us firing up the snowblower and buying the salt. They've not been right a lot in the forecasting, but the landing that they're working on, it just might be coming in soft or soft-ish, as the LPL research likes to say. I continue to think the magic word is valuations and how the earnings come in, and expectations are adjusted. This, in my opinion, will rise to the top again, and it will be the component to watch. So the next few weeks have a lot to watch. This is the noise. Remember, check back on Friday as we really try to pull the signal from the noise and stay focused on your goals. Until then, come back on Friday. Have a great week.